So this session, we have Jane Ge. Jane is the founder of the Vector.Angel community, which focuses exclusively on impact investing. Jane comes from a cleantech policy research and venture investor background. She's working on cleantech innovation research at UC Berkeley and also has a post in corporate VC that focuses on renewable energy. In her free time, what limited time she has, she also leads a volunteer-based nonprofit called Energy Innovation Network that connects energy professionals for a sustainable future. Welcome, Jane.
Jane and I are actually co-investors in Tinctorium Bio, and we almost became co-investors in Lupa Bio as well. So we share a couple of portfolio companies. It'd be great to get your perspective. So as a course of your many jobs, you see a ton of founders. And I think from seeing a ton of founders come through your way, you've seen some are more successful at getting funding than others. And given the audience of this session will probably be mostly founders, what advice do you have for early stage founders?
Yeah, I think for early stage founders is that I think the goal is to first understand yourself. What do you want to do, and what is the goal for you to do this company? Mm-hmm. And many founders get this thing very confused at the very beginning. And some of them consider only getting venture funding as a way to get successful, but it's often that their business model doesn't even fit into a VC track, and they still insist they should be getting VC funding.
Yeah.
However, if you just want to start a company, have your own shop, maybe it's nice to bootstrap with a boutique shop. There's nothing wrong with it. And if you want to have a great impact, you can do NGO. You don't have to get venture funding. That's not the only way you can get funding to support what you're passionate about. So understanding yourself and your goal throughout this journey, I would say it's the number one importance. And many of the founders don't know that part before they already start to knock on the door of venture capitalists and realize they got turned down.
I actually gave the same advice on a radio show, which is, VC funding is one form of funding, and it's not even the biggest piece of funding. And it fits a particular type of company with a particular type of growth path. And so unless you fit that mold, you're unlikely to get VC funding. And it has nothing to do with whether or not you're a good entrepreneur. It's just the nature of your business. I totally agree. Absolutely agree. Do you find that when you tell them that advice that it sinks in right away, or it takes a couple of iterations?
I think it's depending on how early the company is. Especially if someone is really just getting started, it's much easier for them to suck in the information. Mm-hmm. Especially when I was, doing mentorship or, this entrepreneurship training related stuff at UC Berkeley. That's how people are willing to take it in, because they're still kind of like in the university study mode. They're learning, so they're not really stubborn on one thing or versus another. Mm-hmm. But for some people who feel like they have like 10, 20 years of working experience, they feel like they know it all.
Yeah.
And like when you're telling them your model doesn't really fit as well as VC, and why do you want to give your piece of share to VCs? Sometimes they're like, I think we're wonderful for VC. I don't think they even know what does that mean by getting VC money, because VC need their money back in 5-7 years. Yeah. Can you assume, like, guarantee that kind of track that VC are looking for, right? Yeah. So I think it's really depending on the people. And I would definitely say the people who are more open-minded are normally more easily to be successful.
Yeah. So I guess we've encountered the same pushbacks or the same conversations. So the other reason why I really wanted to talk to you is that, first of all, I actually love clean tech. I think, we need a lot more of these breakthrough technologies, given where our climate change is going at the pace of change. We really need some technological breakthroughs to actually make a dent on it, much less reversing it. So I think in terms of, sort of history of venture funding in clean tech. We saw a big wave starting in 2005, especially I'd say 2004 to 2007. There was a huge wave in it. And some of those investments didn't go very well. And now we're sort of seeing a resurgence in clean tech investing. How would you compare the two? And what's different this time?
I would say 10 years ago, the wave on clean tech investing was not mature enough.
Yeah.
And the people also in the space, many of them came from investing in semicon or internet. So those are very different trajectory compared to clean technology. Especially 10 years ago, many technologies are not as mature or cost was not as down. So if we're looking at renewable energy today, when solar, the material become a lot cheaper and they are actually comparable with the fossil fuels. And that enabled a lot of business opportunities versus 10 years ago, the costs were still high and the industry was relying on government subsidies. So you really have to know the field to play well. Even now, it's still like you need to know the field to know how to navigate through. And also the very long cycle for technology get to market. It was very new to investors before. And for example, how do you know when a battery technology get to market? That's still a question today. There's so many new material science companies coming on board, but the question is like, when can you make sure this technology goes to market?
Yeah.
Right. So that's that was a misunderstanding like 10 years ago.
Yeah.
And people thought, oh, this is a new wave of opportunities, but that opportunity really require expertise.
Yeah.
And if you're not the right person to know, then you will very unfortunately realizing your portfolio company is sucking out your money and you're not getting your return in 5 to 10 years.
Yeah. 10 was lucky in the last wave. One of the examples I give so one area I'm super passionate about is synthetic biology. Is that when the first time we sequenced the human genome was literally $1 billion, and now we're getting close to 100. We're not quite there yet, but there's in the US you can get it for about $500, and in China they're bragging about $100 per sequencing of the entire human genome. And so if you think about it that way, a lot of technologies are VC fundable because you get so many shots on goal, right? And so gene editing is the same way. Is that before Ginkgo Bioworks and before Zymergen, a single gene editing is 5 to 10 million per pop, right? But now we can bring it down to 100,000, 250,000. So if you actually raise $1 million, you have a couple of shots on goal instead of having to raise $5 million and burn your entire round on one gene editing try. So I think, it's, I play poker, so you can actually diversify your risk. You get a couple of shots on goal to actually get your odds. So it's, I sort of play the numbers game as well. So on a very related note to clean tech investing is impact investing. And I'm super happy to see, even on the public equity side, ESG funds is seeing inflows. So there's really an increased interest in impact investing. What's your view on that, and what's your perspective?
Yeah, I think it's I'm very happy to see the surge. For the Vector.Angels community, we focus on impact investing in general. So anything can have an impact in the society, we put them in, and we're putting them into two categories: sustainability and healthcare. That's what we currently focus on, but obviously there are many other companies or type of companies could bring impact that where currently our angel community is not taking in, but in the future it's very likely we will include them. So impact investing, I think I hope every investment we do in the future are impact investing. And the companies should be applying for ESG standards, especially bigger companies. We cannot really expect, right, a teeny tiny startup to be like perfect on every angle. But if you're like very well established company, that should be the expectation. And also from many literature studies, ESG companies, like the companies have better ESG actually have excellent return or even better return. Now like people are aligning, trying to see the correlation between those two, and I think it's going to become a trend, and the companies will pay more attention to their ESG management, because ESG management is a part of management.
Yeah.
If you can manage this part well, you can manage other part well, right?
Yeah, exactly.
Yeah.
So I spent 18 years on Wall Street on the public equity side, and what I've seen, and this is, not through very rigorous analysis, but just looking at the companies that have handled ESG quite well, either their workforce or their consumer base tends to be more tech savvy and slightly younger, right? And so as a result, they're forced to pivot and keep up with, the trends, whether it's, millennials and Gen Xers are more attuned to climate change and, voting with their dollars. But it's also a sign of, management in general, right? Is how sensitive are they to forecasting the trends, right? It's, Coca-Cola lasted 30 years before they had to pivot, and I think McDonald's was like 20, 25, right? And so I think the period, that moat that companies have before they have to really change and pivot is shortening. Is just the the innovation age that we live in. And so I think being able to manage in an ESG friendly way is actually an indication of how forward looking management teams are. So it's one possibility. So if you look at the two areas that you cited, what new areas are you thinking about adding to Vector.Angel?
Well, we currently didn't put agriculture as an area yet, but we always have members interested in agriculture. So maybe we'll take a look at it, but that kind of fall into sustainability area, and also healthcare, also health, like because we know like agriculture have a very profound impact on climate change. Like there's the new wave for like Beyond Meat, because they do have lower carbon footprint, like for vegetable compared to meat, right? So we do say those trends, and often they also tap into the human health, right? How do you
Absolutely.
Yeah, so it still doesn't really go out of those two categories, but but we haven't really run company in this area yet, but I think in the future I'll definitely see more companies, and we're happy to look into them.
Yeah, one step at a time. I totally agree with you. I had a call with Sean O'Sullivan of SOSV, and I thought, the benefit, like bioreactors are able to produce 9 times that of, the equivalent amount on land. And he corrected me. He said, "Oh, it's 9x in terms of energy usage. It's about 30x in terms of land usage." So, at our current rate, we really can't support 10 billion people. So we have to do something. And I think, a lot of investors are not looking that far ahead, but we are going to hit 10. And, how we're going to feed everyone, right? And so if we don't start working on the technology now, we can't, once we hit 10, we're not going to be like, it takes time for the technology to mature. So we got to start now. Yeah, so I totally hear you. The other, I totally also agree with you on the healthcare part, is a lot of the biotech innovations that I'm seeing, there's actually a lot of synergies with animal health. Is, a lot of, so Lupa, that we almost, that I'm an investor in, and I think a Vector almost invested in, they are sort of it's a human oligosaccharide company that is a natural anti-inflammatory, right? And so they're actually working on animal health. And so not only would it be already a first contract, but it also provides the animal studies necessary before it goes into humans, right? So it's sort of a double benefit there. So yeah, so I think that's a good. I think ag is a great third area for Vector.
Yeah.
So I guess the other area that we talked about as we're both female investors in a industry that I think the last stats I saw was only 3% of capital go to female founders, and I think 7% of VCs are female. What's your advice to female founders that you've given?
Yeah, I think we really hope to see more female founders.
Mm-hmm.
Females are have a lot of advantages that sometimes a little bit more sensitive, be able to picture better sometimes than men, and more. But we also feel like females can be more confident in front of other people, and they should let them know that they can lead.
Mm-hmm.
And instead of like just a obedient worker
Yeah.
for men, they could
Yeah.
be there, right?
Yeah.
And they have the capability, and they need to be standing out there
Yeah.
and to be able to like express themselves, and to be able to tell them, okay, I can get it done, right? And also for female founders, there's another level of challenges how to balance family
Mm-hmm.
and their work. And many females they have to raise their children, and that's like a traditional moral that females are taking. So maybe it's time to ask your supportive husband to do some work for
Yeah.
you, right?
Yeah.
To get it done, so you don't
Yeah.
have to sacrifice one for another.
Yeah.
And also, I also do feel like the female founders and female investors also do bond better,
Mm-hmm.
and because um, female investors are more inclined to support female founders as well.
Yeah.
So there are definitely also trying to include more female investors in the field, and then hopefully by this chicken egg, we'll see more and more female founders as well.
Absolutely agree. And I was very thrilled to see reports that showed that female founders actually have better returns
Yeah.
at funds. And the return on investment dollars, especially, was multiples that of average. So hopefully that is incentive
Mhm.
for every investor to take a second look at female founders. Yeah. So I want to make sure that we leave with something. Well, actually, how did you get into clean tech? Because that's the other thing I'm trying to motivate more people in
Mhm.
to do, is to care about the environment, to actually do something about it. So what's
Mhm.
your story? And hopefully we get more people like you.
How do I get into clean tech? So, yeah, it's a very good question. So I will say, I grew up in China,
Mhm.
and China was a very heavy polluted place when I was little.
Yeah.
And that was just something that need to be fixed.
Mhm.
And I also have my generations coming down. I'm actually a third generation working in energy space.
Oh, wow.
Yeah, so I see how like my parents, grandparents are contributing to this field, and how this field have been changing, and how clean technology can really make an important role to help with the environmental space.
Mhm.
So that feels really natural for me to pay a lot more attention when I grow up.
Mhm.
And I started to get into environmental clubs when I was in high school, and then I moved to Canada to continue my study, and I studied clean technology, clean renewables. That's my study, and I just continued on that path and for the career. So that is how I did it, and I think it's really a very interesting, fascinating field. Not only is you can help with with the environmental impact on what you do,
Mhm.
and also you can see many interesting new technologies and new movements are coming to man with traditional business, traditional like energy industry that you don't really see changing for the past 100 years, and now all of a sudden with many new stuff like new data science or new technology, it's having a new life. So it's a very interesting and exciting time to be in as well.
Absolutely.
Yeah.
That sounds great. I hope there are more people like you coming to the field. I want to make sure that we leave with your contact info, or what's the best way to get in touch. If it's a founder trying to get advice, or pitching to Vector.Angel, what's the best way to reach out to you guys?
Yeah, so if founder wants to pitch to Vector.Earth, we actually have our Wednesday pitches. So every Wednesday, our deal team, the investment fellows, are there together to listen to new companies pitch. So if the company is interested in getting invited to the pitch sessions, they can fill out the online form for submitting their deck. And if we think they're a nice fit into our category, we'll invite them to our Wednesday pitch session and see if we want to work with them officially, go for a syndicate, or if they're not the best kind of fit, and we can still pass on to our newsletter so people can work with them individually. And if someone wants to reach out to me directly, they can reach out to me at my Vector.Angel email at jge.vector.earth. They can feel free to do that, and some people, they do add me on LinkedIn, poke me, and again I tell them, okay, email me in this way to further the conversation.
Yeah, I do have to say that, and once a month, there's usually a group investment, and you usually have a due diligence call of some sort. And I remember it was very well attended, and there was one that was 3 hours long, and I wasn't the only one that stayed the entire 3 hours. There were many people, so you have a great angel group going. I highly applaud you for what you're building.
Yeah, we do hope to have the 3 hour session to cut down to 2 hours or maybe shorter, so we don't drain everyone. It is still a process where developing. Hopefully, our next whole investor deal session is going to be in August. I think it's August 19th should be.
Okay,
Yeah,
I'll put that on my calendar.
Yeah, and we're asking the company to shrink their presentation to 5 minutes, so I don't drag it to 3 hours.
But you were a benevolent dictator. You gave us at least 2 breaks, maybe 3. So it was totally fine. Yeah.
Okay.
Yeah.
Yeah.
Thank you so much. It's been great having you on this. And I thank you for all of your work. We definitely need more innovations in clean tech and impact.
Yes, and I'm very glad you're inviting for the conversation today, and we hope to do more investment and more work with you.
Yeah, absolutely. Look forward to more co-investment deals.
Okay, great.
Thank you.
Okay, thank you. Bye.